So UK mortgages have been running out of control with the mini budget that come out from Kamikaze Kwarteng. I can't help but still thinking Kwarteng, but my immaturity, and Liz No Trust. So they went skyrocketing up. Some quotes was getting a little while ago 8% mortgages. Bearing in mind over the last sort of decade we've been getting a more close to 2-3% mortgages. So it was a rude awakening. As I said, but that said, I started in 09 and the interest rates was around 5% then. We just had a ridiculously low rate. But that said, it's still hard to wean ourselves off of this ridiculously low rate that we've been experiencing over a period of time. And thankfully, interest rates are coming back down. So what does this mean for property investors? It means good news. It's making deals starting to stack a lot better again. But before we get into that, make sure you like this. Make sure you hang around to the end, because I'm going to share with you a little tool which is going to be a digital broker that you can cut out all your physical brokers and see what products are out there great for you. But what we're going to share in this is what products are available for you now at time of recording this mid-November for property investors. And I think this is set to change for the better, by the way, not for the worst. So I'm Harvey, remote property investor, and I've been investing for years. I've never seen a market how we've seen over the last 2 years. One of the things we've had from this growth market and these low interest rates was it's been hard to get deals. One thing I'm seeing at the moment is as the interest rates are going up, the market's more uncertain, we're getting better deals. So you win in either way. There's a property strategy and a strategic approach you can adopt in any market and any cycles. Just making sure you adopt that correctly. So make sure you follow this page to keep up to date with what you should be adopting. But let's have a look at the mortgages. So mortgage rates. So this is according to an article released in This Is Money. So it says fixed rate mortgages are falling. Yorkshire BS and can't help but laugh when he says BS, but Yorkshire BS platform are the latest to reduce the interest rates, and some say they're coming back down, coming back at 4% next year. So a number, even like, look, one of the things we haven't had at the moment is the new budget that's come out. And even before this, even with the interest rates going up, bank interest rates are going down. Why is this happening? It's because there's much more stability and confidence in the new government and coalition that we have. Well, not coalition, but government we have. So if you look at this chart here, it shows you we peaked out with the crazy budget and now it's starting to come back down. So it said, look, average 2-year fixed mortgage rates is now around 6.28%, says Mortgage Facts. I'm going to show you some bits from Mortgage Facts. Hang on, I'll show you some other rates that are out there. This is the average. Remember, the average is two sides to an average. It says also HSBC, Halifax, Lloyds and NatWest have reduced their rates in the past week. Gilt yields have fallen back down to a pre-mini budget levels, but uncertainty does remain ahead of November's 17 physical statement. So this is the budget that Rishi and his new little team he's put together are going to bring out. So this could go either way. This could be really good and make prices come down, or rates come down even more, or this could be really bad and unsettle the market and make things go out. Jeremy Hunt was announcing at the moment everybody's going to pay more tax. Look, for me, it was inevitable at one point or another after all the money printing and the COVID and the survival plans they placed in place for that, people are going to pay tax at one point or another. But none of us can predict for certain. But the predictions that are out there at the moment, as per this Is Money article, says that furthermore, market predictions for how high interest rates will go next year have come down significantly, with most expecting a base rate to peak at 4.5% and a 1.5% lower than forecasted in the wake of the September ill-fated mini budget. So this is a much more optimistic view. This is a much more realistic view around managing your deals. I've been paying around 4 or 5% for a while because I'm a portfolio landlord, so my rates have been higher for quite some time anyway, and I've factored that in. I started off at higher rates as well, so I've priced it in, I've factored it in. I buy properties in the northeast, not in the south, where you've got really large yields that can absorb these interest rate rises. Of course, it's a bit of a sting if you're paying more money on your mortgages, but I've got properties that can handle that. But as I said, these averages are out there, this 6.23% or 6.28%, whatever that was. These averages are out there, are just averages. There's lots of products out there at the moment that are quite keener. And there's a way we are attacking this. We're getting like 4% sort of products at the moment, because what we're doing is we're putting our products, some of our products, not all of them, on a tracker. And what you want to do is you want some fixes to make sure you've got your steady income. But on a tracker, at the moment, we're looking at the average fixed rate over a 2-year period, and a tracker which has got no early repayment penalties after 1 year. And basically the base rate would have to go up to over 5% before we hit what the fixed term was at the moment. So it's a bit of a gamble, but I'm willing to take that gamble with the market predicting it'll come down. I think it will at one point. We don't know for certain. There could be other uncertainty. So it is very much a gamble, and please do your own due diligence to take these gambles. But we're doing this on some of ours. I fixed loads of my stuff just before. I fixed loads of my products and properties just before we come into this period. And I've got long-term fixes at 5 years because I predicted we was going to get a bit of a rough time. So now stuff that is coming up to right, or stuff we're buying new, some of them are putting them on tracker. And as I said, it's got to hit a base rate of 5%. And seeing as they're predicting it'll be at 4.5%, it means it's got to go a long way before even at break-even point of what I'd be paying in interest at the moment, especially on some of the deals, it'd have to go up to maybe 6% base rate on some of the products. We just bought a property which was a 60k, and because it was a low value property, the rates we was getting offered at the time was 8%. So the base rate had to go up to 6% before we got the tracker at where it's at. So, but if you look on here, this is from Moneyfacts. If you go onto their website, you can see the products at the moment. So you've got some 2-year fixes at 4.39%. This is if you're buying in your personal name, by the way. You've got some 60% loan to values at 3.09%. They are variable like tracker style mortgages as well, but there's some keener deals out there at the moment. Let's go and have a look as well at what we've got also in the form of limited company business loans. Not quite as keen as in your personal name, and hence this is why you really got to think about sole trader or limited company. There's more to it than just section 24. It depends on if you're a high rate taxpayer, but it's not time for that now. But look, if we look at this, we've got some products here. This first one we've come to is at 5.29%, which is not too bad for me. 5.69%. We've got a 4.19%. Again, that is a variable tracker style mortgages. But what you want to look at if you're doing variable and trackers is the early repayment period. You want that to be either 0 or only 1 year, no early repayment after 1 year, because then it gives you options if things come back into a better way, and there's a bit of margin in there before you're going to be hitting your average rate anyway. So there is quite a few products out there at the moment, as you can see from here. Let's start going up. The mortgage lender at 6.69%, but there is products out there at the moment. Make sure you've got a good broker. And with that said, if you put in the comments DA, so stands for Deal Analyzer, we'll send you over a digital broker. You don't need any brokers. You can just put in your details. You can analyze deals, and what it's to do is spit out some of the products. It's not open every market, but it'll spit out some products that's suitable to you, and it'll give you a lending option. So if you want a digital broker to help you with that, put DA in the comments. But listen, at the moment, it's a great opportunity. Whenever there's uncertainty, there's great opportunity. Warren Buffett says, observe the masses and do the opposite. These are opportunistic times, not opportunistic times. Somebody criticised me saying, oh, you take advantage of people. You're not taking advantage. You only take advantage of people if you put them in a vulnerable position to not be able to pay their bills and then bought their property from them. But they're in vulnerable positions anyway, so somebody's going to have to buy these deals. If you educate yourself correctly, then there's going to be a massive opportunity both to trade deals on, add income, and also to be able to build your own portfolio in these times. If you want to learn more about that as well, and you want me to help you with your journey on that, put in the comments education, and you can explore what education options we help people with. We've got some free stuff, we've got some paid stuff, so put it in education and we can tell you what we can offer you help with that. But listen, thank you very much for being here still now. It really means a lot. If you've not done it already, hit the like button, make sure you hit the subscribe button, hit that bell icon. My wife's live my terms. My mission is to help as many people live on their terms as possible. So if you can share this out, it'd be amazing. But remember, if you don't evolve your ideas, you'll never live on your own terms. So evolve your ideas, live on your own terms, and have an amazing day.